Are you completely fed up with filing a self-assessment tax return year after year after year? Well, in this guide from the experts at ProTax Accountant, we're going to answer one big question. When can you finally stop? If that January deadline fills you with dread, you're going to want to stick around. We might be about to make your life a whole lot easier.
January 31st. It just kind of hangs over you, doesn't it? All that paperwork, the confusing forms, that little voice in your head worrying you've gotten something wrong. But what if I told you that whole annual ritual might be completely unnecessary for you? What if this year could actually be your last time? Let's find out if you can wave goodbye to self-assessment for good.
Okay, so to figure out when you can stop, we first got to remember why you had to start in the first place. Self-assessment isn't for everybody, right? It's specifically for people whose tax isn't just neatly taken care of through a regular payroll. So let's do a super quick refresh on the main reasons you might have ended up in the system.
Does any of this ring a bell? You know, the biggest reason is usually being self-employed and making more than £1,000. But maybe you're a partner in a business where you're a landlord renting out a property. Or maybe you've got other untaxed income from savings or dividends. Then there's the high-income child benefit charge. Or maybe you had to report capital gains tax from selling an asset. If any of those are why you started filing, you are in exactly the right place.
All right, now for the part you've been waiting for. Life changes, you know? Your side hustle might fizzle out, you might sell that rental property, maybe you've gone back to a full-time PAYE job. But here's the thing, and this is so important. HMRC's system doesn't automatically know this. They're not psychic. It's actually up to you to see the signs and tell them. So let's dive into that and look at a couple of real-world examples.
So let me introduce you to Cyan. She's a brilliant graphic designer down in Cardiff. For years, she had a pretty successful freelance gig going on the side of her main job, so she always filed her self-assessment. But lately, her full-time role has gotten super busy, and that side work, well, it's kind of tailed off. It's more of a hobby now than a real business.
So last year, that's the 2025/26 tax year, Cyan only brought in about £800 from her freelance design work. The big question is that small enough for her to get out of filing a whole tax return? Well, the answer comes down to this magic little thing called the trading allowance.
And here's the golden rule. In the UK, you have a £1,000 tax-free trading allowance for any self-employment or casual income. Since Cyan's £800 is well below that threshold, she doesn't need to file a self-assessment just for that income anymore. For anyone with a small side hustle, this is a total game changer.
Okay, let's look at another really common situation. Let's head up to Glasgow and meet Ewan. For years, Ewan was a landlord with a buy-to-let flat, which of course meant he was firmly in the self-assessment system. But last year, he decided it was time to sell the property.
Now, hold on. Ewan can't just stop filing right away. This is key. He must file one final tax return for the year he sold the property. Why? Because he's got to report any capital gains tax from the profit on that sale, plus any final rental income he received. But, and this is the best part, once that's done, his obligation is over. For all the tax years going forward, with no rental income to report, he can officially get out of the system.
So let's just quickly run through those key numbers again for the 2025/26 tax year. You've got the £1,000 trading allowance we just talked about. There's also a £500 allowance for dividends. For savings, it's usually £1,000 if you're a basic rate taxpayer. And that high-income child benefit charge, that kicks in when you're earning over £50,000. If your income in these specific areas has dropped below these thresholds, a little light bulb should be going off in your head right about now.
Okay, so you've checked the numbers, you've looked at your situation, and you're pretty sure you're exempt. That is fantastic news. But, and I can't say this enough, you can't just stop filing and hope HMRC doesn't notice. You have to formally break up with self-assessment. So let's walk through exactly how you do that.
But first, here's a massive pro tip from the team at ProTax Accountant. Whatever you do, do not just ignore a notice to file if it comes to your letterbox. Even if you owe zero tax, just not responding can land you an automatic £100 penalty. That's £100 down the drain for nothing. You have got to be proactive and tell them your situation has changed.
All right, let's make this super simple. 5 steps to freedom. First, go on the gov.uk website and use HMRC's own online tool to double-check that you're exempt. Step 2, get your details ready. You'll need your UTR number and your national insurance number. 3, the most important bit, actually tell HMRC. You can do it online, give them a call, or even send a letter. 4, just like Ewan, make sure you file that one final return if you need to. And finally, step 5, and please don't skip this one, get written confirmation that you've been taken out of the system. That piece of paper is your proof.
So you've done it. You've followed the steps, you've got that confirmation letter, and you are officially out. Congratulations! But what does that actually mean for you? What's life like on the other side? Let's paint a quick picture of your new, much simpler financial life.
I mean, just think about the difference. Before, you've got that annual stress, all the complicated record keeping, and that little nagging worry about penalties. Afterwards, no January deadline, simpler finances, and just peace of mind. If you're employed, your tax is just handled through PAYE. It is a genuine weight off your shoulders.
So, if we boil this all down, what are the absolute must-knows from this guide? First, if your life changes, you can stop filing. Second, know those 2025/26 numbers. £1,000 for trading, £500 for dividends. Third, you absolutely positively must tell HMRC. Fourth, not telling them can cost you £100. And finally, get that confirmation in writing. It's your ultimate safety net.
And that really just brings us to the final question, which is for you. After everything we've just gone through, take a second. Think about your own situation. Has that side project gone quiet? Did you sell something? Has your income changed? Could this January, right now, be the very last time you ever have to worry about that self-assessment deadline? Look, tax stuff can be complicated, and everyone's situation is unique. So if you're still a bit unsure, or you just want the peace of mind of having a professional look things over for you, please don't guess. Get in touch with the experts. You can reach the team at ProTax Accountant directly on WhatsApp or phone at 07985 689912. Or just drop them an email at info@protaxaccountant.co.uk. They'll give you the clarity you need.
And hey, if you found this guide helpful, there is plenty more where that came from. For more clear, practical, no-nonsense advice on all things tax, make sure you hit subscribe on the ProTax Accountant YouTube channel. Thanks so much for watching, and here's to a future with a lot less paperwork.